let's talk about stocks.
Okay, let's bring in our market panel. We'll see how they're doing. We have Scott Martin from Kingsview Asset Management. He is a Fox News contributor. We also have Jack Otter from Barron's.com. Jack, what do you think about today's market? Let's see if your audio works.
I'm just kidding. My mic works.
That would be very funny on a different show.
Very funny.
We're not really after that today,
funny.
Jack.
Well, for a while here, I think it's been what we've called the TINA market. That's there is no alternative, so therefore people are buying stocks. At these lofty valuations, it's hard to get too excited about the long-term forward returns. But hey, you got what you got. I mean, bond yields are going to give you, what, 1.5, so you'll look for good deals in stocks. A lot of cool earnings coming up this week, a lot of sexy stocks in tech land, although personally my favorite is Ford. At, what, 7 times earnings? That looks kind of interesting to me. I'd rather pay that than the 18 times the market's going for.
All right, let's move over to Verizon. That was the big stock move of the day, acquiring, if it's allowed to acquire, Yahoo in a $4.8 billion deal. Now, this price includes Yahoo's core internet business in addition to real estate, adding one more piece of the media empire Verizon is attempting to create. It also has Huffington Post, a lot of other stuff, and that's the point. Yahoo has had kind of an identity crisis for a while now. What exactly is Verizon buying into?
Is that question for me or Scott?
Yeah,
Just
for
checking.
you.
Okay.
Yeah.
You know, that's a good question. I think that Verizon is trying to expand its over-the-top business. I don't think it's Verizon, the phone company, we're thinking of so much as Fios, but also mobile. You know, Verizon wants to own this thing, and this is where the internet is going. It's not on the desktop in the future, the tablet, I don't know about. It's on the phone. So any more ways that Tim Armstrong can advertise and make money showing you content, he wants to buy that. Yahoo's biggest strength is its tens of millions of eyeballs. The traffic to that company is very good, even though the stock price has plummeted, and of course it's got so much competition. A few things about this deal that haven't really come out yet. It's actually a better deal than it might look like on the surface. For instance, Verizon is going to absorb nearly $1 billion in liabilities for AOL, what it owes its employees, stock options and other things like that. So it's really more like a $5.8 billion deal.
Okay, well, let's not get so into the weeds because, Scott Martin, of all the assets that Yahoo has, I think the biggest asset is they have 1 billion users. That many people. There must be a way to capitalize on that, right?
Hopefully. I mean, I think that's what the deal's based on, David. And I guess I kind of disagree a little bit with Jack, where, to me, this is the wrong platform if you're Verizon that you want to buy into. Now, yes, there's probably some value here, and that's what they're going after. But I thought you were going to say something else, David. To me, the biggest asset on Yahoo's books is the Baba stake, which is not part of this deal. I think that's a big thing that kind of took away from this deal, really
but
being that exciting to me.
Scott, hold on a second, because that's just cash. I mean, when you have people, when you have loyal people who are used to using the Yahoo format, I mean, I happen to be one, I don't know anybody that doesn't have some Yahoo account. There's got to be a way to use that, and a place like Verizon is just the kind of place to do it.
Fair enough, but in the last couple years, David, the only thing that's really moved that stock has been news out of Alibaba, and I would actually disagree and say nobody's had a Yahoo internet address, at least since 1999. That's when it was actually cool. Nowadays, it's Gmail and Facebook.
And
my goodness.
I
know you are. I know you are.
But listen.
Biggest names in tech reporting after the close this week, with Apple and Twitter kicking it off tomorrow. Facebook is on Wednesday. Amazon and Alphabet are on Thursday. Jack, you know, the one that really catches my eye here, of course, is Amazon. Revenue's growing 27.5% in the second quarter. The profit estimate for $1.11 a share, up from, I think it was 19 cents a share a year ago. This is all about the cloud.
And
this is astonishing.
Up from zero or negative earnings year after year after year. I mean, you hear that Amazon's getting
They found a business.
That's incredible. I wonder if the market's going to take this as bad news, because suddenly it actually has a price to earnings multiple, and that is a very high number. It's a little bit scary. But clearly, Bezos is just killing it in every way. I mean, his competitors in the cloud, IBM, sucking wind, and he's doing so well. So I think you only buy Amazon on faith. You don't buy it based on an analysis of
might
from
now.
next quarter's earnings. Well, if you do, I think it's kind of scary. Like I said, I don't know what's the price earnings ratio, 600 times. So that's a little bit of a concern. But over the long term,
right,
we're going to do everything we do. We're going to buy everything we buy through Amazon. It's pretty incredible.
Although, I mean, Scott, if you look at the trajectory of the rate of growth of how much profits are growing and this business that they're in, it is starting to make sense, or no?
Yes, and revenues, too, to that note, Melissa, are growing at a nice rate. So that's the other thing, too. I mean, I'd rather see, I guess contrary to Jack's point, I'd rather see earnings or a high PE than no earnings, and that's really what I think is dangerous here if you're trying to compete with Amazon, because there is no competitor. I mean, I'll admit it right here on national TV. I buy my pens, pencils, and gum on Amazon. So do a lot of other people. You can't stop them. You got to own the stock, and we own it here.
Yeah, Jack, which of the other tech stocks out this week have caught your interest?
Well, Apple is always interesting. I mean, talk about the other spectrum, the other end of the spectrum in terms of valuation. Where is Apple now? 9 times earnings. This has been a lousy part of the cycle for them. I think the bullish case would be that this is like 2012, 2013 when they were down, and maybe the iPhone 7 gets a good pickup. Although, frankly, I'm going to wait for the 8, which apparently is going to have an innovative screen. So I don't see a big catalyst for Apple right now, but they're slowly working on a few initiatives. The car business, apparently, they've got a new head of that, so maybe that's going to go somewhere, although cars are not a high profit margin. It's not like an iPhone that has, 70, 80% profit margins. So we'll watch that carefully, but really, I think we're looking ahead to September. Right now, this earnings report isn't that important for Apple.
Okay.